HDFC just delivered its numbers. Let's cut across to Keki Mistry.
We had a total of 62,628 crore worth of loans which have been sold by us, but where we continue to service these loans. Our focus continued to be on affordable housing. Affordable housing segment continued to do very well. If you look at it in terms of number of new loans that we gave in this period, 36% of the loans that we gave in numbers were to borrowers who are either in the economically weaker section or in the lower income group. In value terms, this was 18%. So 36% in numbers and 18% in value were loans given to borrowers in the economically weaker section or in the lower income group. Every month we approve close to 9,500 crores, a little under 9,500 crores of loans to borrowers in the economically weaker section and in the lower income group. If we look at the average loan size, to borrowers in the economically weaker section, average loan size is 10 lakh and 10,000, that's 10.1 lakh. And to borrowers in the lower income group, our average loan size is 17 lakh and 50,000 rupees. The overall average of loans that we carry now is 27 lakhs. So we've actually seen a reduction in the number of, in the value, in the average loan size of loans given in the first quarter versus the second quarter. In the first quarter, the average loan size that we gave was 27.7 lakhs. In the second quarter, it was 26.6 lakhs, giving a total of 27 lakhs on an average for the 6 months as a whole. So the growth of 17% in the AUM for individual loans has to be seen in the light of the fact that this was on an average loan amount which is lower than what it normally would be, and therefore the volume growth was that much higher. If we look at the breakup of loans outstanding on a balance sheet basis between individual and non-individuals, 76% of the loans outstanding on a balance sheet basis were to individuals, 12% were construction finance, 8% were LRD loans, which is lease rental discounting loans, and 4% were corporate loans. So that's the breakdown on a balance sheet basis. However, if we were to look at this number incrementally, I mentioned to you in the last 4 or 5 press conferences we've had after the quarterly results that we are going slow on our non-individual lending. It's not that we stopped doing non-individual loans, we still are doing it, but we are doing it very, very selectively, very, very slowly. So if you look at the last quarter, the second quarter, 97% of the growth in the loan book was on account of individual loans, and only 3% was on account of non-individual loans. If you look at the 6-month period from April to September, it was 94% in respect of individual loans and 6% in respect of non-individual loans. As you know, for our subsidiaries and associate companies, we do not mark to market these investments based on market prices. We continue to carry these investments at historical cost. The difference between the market value of these investments on 30th September and the price at which these investments are reflected in the balance sheet
of HDFC, Mr. Keki Mistry, talking about the quarter gone by.